Hello everyone, and welcome back to another market review. This is Silent. We are looking at the NASDAQ December contract for 2025. As always, we are starting out with the weekly chart. If you remember how we're tracking this down close candle on the weekly, we stab up above it and then reaccumulate here above the mean threshold of this range. Price launches up. For the past 3 weeks it's been green, and then finally going into this week we have begun to see a pullback after rallying very strongly through, creating new all-time highs. We have overlapped almost all of the previous weekly candles range and have settled off of the low, and we've nearly closed today's candle, Thursday, right about the midpoint of that up close candle. So going into tomorrow will sort of be a toss-up. I'm entertaining the idea that we may have completed the weekly range and are going to settle off the low and not make a new low going into tomorrow. If we end up doing that, we will produce a small imbalance here for next week's trading. From this candle high to this candle low, there's a small portion that has been undelivered, and this range is inefficient for buy side delivery. So opening here, trading down, almost rebalancing the previous weekly candle from 2 weeks ago, rebalancing to the high. Instead, we've traded almost there and come off the low. So I'm watching to see if tomorrow we begin consolidating, and if going into Asia and London tonight, if we just begin stacking price ranges, doing overlapping price ranges, it's going to tell me that most likely this gap is going to be put in place and we've done what we need to do for the weekly range, and we'll be settling off the low. Now, whether it be wherever it closes at, that's not for me to determine, but we've at least have the markers for our weekly range, and if we have that consolidation going into New York tomorrow, our last thing that we would be suspecting is to see any more downside. We would be just going in to the market open and being okay with it being a consolidation day. On the daily chart, if you remember in the previous video, I brought your attention to the constant encroachment of this wick from this daily candle here, Wednesday's candle. We opened here, we traded up slightly, ran into this wick, and delivered on top of the constant encroachment of this wick, or at least nearly got into that range. Folded lower, delivered on over top of that buy side imbalance completely, and even stabbed into that lower buy side imbalance that we had marked with these green lines here. I wanted to differentiate between the two on lower time frames and not spam the higher time frame charts with purple, because the lower time frames, the whole range will be covered over top with that shade. We nearly came down into the wick of this daily candle, that large wick that had overlapped that buy side imbalance in the first place. On the downside, it become a strong draw on liquidity because we have this imbalance here, but the wick in itself is also inefficient. So there's really no delivery of bodies on the downside in this range. So I believe that's what they're going to try and put in before we make another turning point. Whether we go higher or create a retracement to go lower will be determined based on this buy-side imbalance, in my opinion. This wick's constant encroachment is pretty much overlapping with that previous weekly range that we were looking at on the higher time frame. So if we decide to stab down lower and create a new low on tomorrow's candle, we're going to close up that gap that we have implied on the weekly chart, and it will not be anything to refer to because it'll be closed up. Price traded 3/4 of this gap and retraced higher, and we closed off of the low on the day, and actually closed inside of Wednesday's daily range and on top of the constant encroachment of that daily buy-side imbalance shaded in purple. So going into tomorrow, depending on where we open here, we can see it attempt to retrace back into this wick and head lower and trade into this wick that was created on Thursday's candle, and then settle for the weekly candle to be closed. So in my eyes, I would like to see price be limited to 687 and the low of Thursday, and down as far as the low into 372, which is the constant encroachment of this wick. So I'm not wanting price to trade above 687 regardless of us trading into a new low of the week or not. I'm just limiting my expectations to 687 for any kind of upside draw before price decides to roll lower and begin to fill in this wick. So in other words, I want it to open here, trade up and stay below 687 and make its way down and try and fill in this wick. And if we miss creating a new low of the week, we'll settle somewhere probably around the high of this daily buy-side imbalance. On the 4-hour chart, we were tracking that balanced price range. Price turned over on a dime right at the constant encroachment of that range, displaced lower, leaving a SIBI. We want to see price trade up into that SIBI and reject, and we saw that very cleanly in the overnight. And then going into London and New York, we had this large downside range be delivered over top of that daily buy-side imbalance. And that's what leads me to believe that this range is going to start being a premium array, because we closed down below it so suddenly, and our attempt to redeliver on top of the previous 4 hours range was stifled after trading into the low of this candle and that daily wick constant encroachment. So we rolled on top of the daily wick from Wednesday, closed here, opened, and then traded back up and retested the Wednesday wick constant encroachment and traded off of that range. And then going into the afternoon today, we opened, traded lower, and redelivered into the daily buy-side imbalance. So in my eyes, I'm wanting price to respect this as a balanced price range and not really need to deliver over through the 687s unless we're going to be either extremely manipulated to get into this imbalance, or if it's going to be entertaining a reversal idea, and perhaps we won't need to see the 372 get delivered to just yet before a greater pullback. My attention is on the daily buy-side imbalance high. If we can open in Asia and begin trading softer and containing majority of the price action inside the imbalance before the daily changeover at midnight or London, if we can start to consolidate inside this range and then trade lower, I'll be expecting price to start working inside this wick and towards these lows and potentially into 372. Otherwise, if we open London with price staying stagnant inside this range, there's nothing wrong with entertaining the idea that we may consolidate this Friday and just create a bear flag kind of idea, kind of a wedge looking thing to end the week and just settle somewhere around 560. So again, in other words, I'm limiting my upside expectations to 687. I want price to stay inside that buy-side imbalance on the daily, and depending on what we look like in London and in New York open would lead me to the expectation of seeing a run lower and close strong bearish for the weekly candle, or if it just putters out and does a consolidation. So I'm either looking for downside or consolidation. I don't want any more upside besides 687. If this delivers, I'm just going to sideline myself. On the hourly chart, again, we can appreciate the respect to that constant encroachment of the balanced price range. Price drops lower, has a market structure shift, and shifts below all this consolidation, going into the hourly buy-side imbalance before the end of the day yesterday. Overnight, we trade back up into that 4-hour SIBI with a retracement. Price colors over just on top of the high of that SIBI and does a little bit of work inside this balanced price range before heading lower. Price does a shift under this low internally and leaves the imbalance here. So retrading into this 4-hour SIBI is a selling opportunity on this candle, and we cascade lower going into New York just before trading higher and settling the day inside that hourly buy-side imbalance that we were watching yesterday. Our attention has been placed on this level because it's at equilibrium and there's wicks in this range and there's candles retesting it multiple times. Even after the smart money reversal up here, it was respected here on the south side of the curve, so that's what brought our retracement into the 4-hour SIBI. So cascading lower below it, we want to see it be treated as a premium array. We color outside the lines a little bit, tagging into that daily wick constant encroachment and then selling off into these rejection blocks. We failed to get a strong sell-off going into the PM session towards that daily wick constant encroachment and just pull up back inside that buy-side imbalance to the end of the day. So again, it's building that kind of triangle wedge retail pattern that may lead us into just seeing a consolidation day tomorrow. On the 15-minute chart, I've just zoomed in to today's price action and limited our scope to just the new day opening gap and onwards. So price opens here with a gap, consolidates. Asia has this retracement, retesting that Friday buy-side imbalance from the previous video that we were looking at. Respects this wick, stops there, starts turning around, consolidates, and then breaks lower. So already in Asia, we're starting to see price begin to turn around, and in fact, midnight open in Asia pretty much caps today's daily range. There's no high that has breached this range. So we cascade lower just outside of Asia, right on the first few minutes of the open after midnight. Going into London, we trade lower below the Asia range low and does a retracement into this sell side imbalance and retest of that 4-hour sell side imbalance. Price breaks lower below this low, leaves a fair value gaps to sell. We break lower, we leave a fair value gap here to sell. We break lower, no fair value gap, price tests and consolidates at the Wednesday wick constant encroachment, and then as the pre-market begins, we get a displacement lower going into Wednesday's low, and then price remains heavy, leaving one more fair value gap here, trades up into it, and then sinks lower right on the open of New York. Price does a strong reversal here. This is around the news. We do a shift here and here, overlapping this SIBI with a buy side imbalance, and overlapping this SIBI with a buy side imbalance. Price trades up into the high of this daily fair value gap, does a retracement into this buy side imbalance and SIBI overlap. So we have a single pass in both ways, which is a balanced price range here. We respect that level and rocket punch right into 687, and that caps the lunch session high. We begin to trade lower. Price does a shift under the low it was created after respecting the higher balanced price range. Again, trading inside of our hourly buy side imbalance from the higher time frame chart and respecting it, putting in a up close candle and overlapping this range and this breaker. A lot of levels converging in here, which creates that consolidation. We shift lower with strength, and it sells strongly into those hourly rejection blocks, which is filling up this wick here. We do a turning point just under the Thursday new day opening gap, and on top of that lower daily buy side imbalance, and heads up and closes off with a consolidation to end the day. On the 5-minute chart, I didn't want to add too many levels because there's multiple models that we can work with and look at. I didn't want to clutter up the chart too much, but we have two major legs that we could have used as a selling opportunity. The first one was all throughout the London and the pre-market session. We have these relative equal highs and this SIBI here on the 5-minute. Going into 3 o'clock, we do a retracement into that and taking out those highs. We shift lower below the last point of accumulation here, leaving a SIBI. Price consolidates and retraces into that range. We sell off. We're doing a market structure shift here with a SIBI. Price consolidates, sells off, and retests it one more time, going into the New York Open. Price sells off with a SIBI again, very clean, dropping in, and all throughout the pre-market of New York, we respect SIBIs and bearish order blocks on the way down. Price has a redelivered rebalance here and retest this low, and then run on the open. We sink down. Price overlaps this most recent SIBI on the downswing with a wick. Price fails to sell off any longer and rejects the lows here and overlaps that wick and this SIBI with a buy-side imbalance, and we just scream all the way back to those relative equal highs from the pre-market. We consolidate, and then utilizing this buy-side imbalance, we rally into Wednesday's wick consummate encroachment and do a reversal here. We shift under. A bearish order block is placed all throughout these wicks, and we overlap that with another shift. And then finally, as we get under this buy-side imbalance that was utilized on the buy side of this curve, after retracing into that order block, we sell off and we get under that buy-side imbalance. We want it to be used as a bearish PDA right now, so we put in a bearish order block overlapping that range. We're canceling out our buys here with shorts, so smart money is taking off their long positions that they failed to either completely offload or held on too long here. They're getting a opportunity to collapse those positions at a break-even price before a quick sell-off occurs, retesting this bullish order block here, and then price rallies going into the 3 o'clock hour and settles on the day with a consolidation. On the 1 minute time frame, the only thing that I've added was our first presentation array from the AM session opening range and the PM session opening range. So from 9:30 to 10, we have this fair value at the print, which gives the selling opportunity right on the open of the New York. We see that reversal there. Price respects that bullish order block and rallies strongly through our first presentation array, and then consolidates before finally reaching up into that Wednesday wick consummate encroachment, doing its accumulation of shorts and finally doing a reversal here after the sell-off. And then every rally higher is a selling opportunity until we reach back into this buy-side imbalance and this order block. Price delivers strongly here and does a retracement, delivers with strength going into the PM session open. We don't really retest this range, so with the logic of this gap being open and us seeing that sell-off really early in the PM session, it leads us to suspect that maybe they will want to patch over this range as the day closes. So if price has an unwillingness to sell under these lows after delivering into the buy-side imbalance high on the daily chart, our expectation is if it's going to do a reversal and begin retracing on the higher time frame, we can see it pull back up into the PM session first presentation fair value gap. And that's what we get. We rally off of it and pair more orders here and then consolidate going to the end of the day. This is a very nice sell model, by the way, but it's just high resistance. So every layer of this model, from the original consolidation to the first stage of accumulation here, and then the second stage going into the smart money reversal, it's very high resistance. And after our smart money reversal, the first stage of distribution retest all of that smart money reversal range, which doesn't typically happen unless you are in a high resistance run. So all of this action is telling us that it's high resistance, and then as it's doing its reversal stage, the retest of that smart money reversal is kind of leading us to believe that even the south side of the curve could be a high resistance manner. And we see that as it accumulates shorts for the south side of the curve. And then finally it's able to release going into the PM session. And then just as we begin the 2 o'clock hour and do our 4-hour candle changeover, we begin retracing to close off the day. So that's going to be it for me today. Hopefully you learned something. If you found anything insightful, don't forget to subscribe and leave a like and a comment. I will see you all